Hello, my billionaire friends. I hope you're comfortable. Welcome back to my channel. And I'll be taking you through the top-down analysis and the weekly outlook for the week. We're going to be looking at GBPUSD, EURUSD, and the benchmark currency, that is the US dollar index. All right, so we're going to be looking at what happened in the past week, and we're going to also be trying to make some forecast and analysis for what we expect to see in the coming week. All right, so we'll go right away into the charts. Now, looking at the dollar index, we're going to be starting from the monthly time frame and then analyze it down to the hourly time frame, where we'll be looking at what happened in the last week and what we expect to see in the coming week. So, for last week, already in this month, we're already seeing dollar expanding to the downside. Okay, if you're looking at it from the monthly time frame, we're going to be seeing it more like a retracement of this swing. Okay, so we're going to be seeing it as a retracement from point A to point B. Okay, all right, so looking at it at that instance, we're going to be seeing that the dollar is already making its way to the discount level. Okay, discount level is any level below 50% of your Fibonacci retracement tool. Okay, any level below 50% is the discount level, and any level above 50% is called the premium level. Okay, drawing it from point A to point B, where you have the 0% at the top and the 100% at the bottom. Any level below 50% is a discount level. Any level above 50% is the premium level. Okay, so looking at the dollar on the hourly time frame, we've seen that the dollar is trading already into a discount level. Now, from the monthly time frame, we may be saying that the dollar is ready and ripe to return back to a bullish trend. Okay, but we cannot confirm that yet until we go down to a level lower than the monthly time frame to confirm a break of market structure to the upside. Okay, so that being said, we can still say that the current stage of price for the US dollar is bearish. Okay, the current stage is a retracement stage, and the retracement is a bearish retracement because it's retracing down somewhere maybe around here or another discount level before it continues up. Until price goes below this level right about here, that is at 89.319, we'll say the dollar is completely bearish on the monthly time frame. But until then, we still say dollar remains bullish on the monthly time frame. But for day traders, you shouldn't be looking at it in that manner. You should be looking at price being in the bearish direction, in the bearish retracement on the monthly time frame, but then you should be taking advantage of the retracement, because this retracement has been going on for close to about 10 months. Okay, so you can't say you sit out and watch for 10 months to wait for your entry, because you're a day trader. You need to get trades as much as you can, maybe as much as 3 to 5 days in a week. You should be able to get in and out of the market. Okay, except you are a position trader, then this should be your outlook. You can wait 10 months and get a good trade that will run for maybe a year or two. Okay, so on the monthly time frame, the stage that price currently is, it's in a bearish retracement. So take note of that. Price on the dollar is currently in a bearish retracement. Then on the weekly, we can see that the dollar has given us a structure to the downside. Let me take this off. Okay, so we can see that the dollar has given us structure to the downside. We're seeing a bearish structure. Price is taking out this low already. When price was still giving us the bullish structure, when it moved all the way up here, came down to this level, and then moved all the way up here, price was giving us a bearish structure. But then price came down all the way to this position and took out this low right about here. Okay, so price took out the low right about here where the orange line is drawn. So after price has taken out that low, we can now confirm that there is a clear break of structure to the downside. Okay, and going forward, price kept giving us lower structure. Price kept going lower, and even to this week, we saw an expansion to the downside. Okay, and price is taking out the liquidity residing on this double bottom and relatively triple bottom. Okay, so price has taken out all the lows after expanding in the week before this week. All right, so now what we saw this week was a retracement. Okay, the dollar tried to retrace most of the sales that took place. All right, so if you want to fib that, you can fib right from here where the sale started to this place. Okay, so this was the expansion to the downside for the US dollar, and price had already expanded to this downside. Okay, giving us a clear break of structure once again. And after a break of structure, what do we expect to see? We expect to see some form of retracement back to the upside, okay, which is what we experienced for the most of this week. Okay, and then all dollar related currency did the same thing that we saw on the dollar. Some did the opposite, some did the same thing, depending on which is the quote and which is the base currency on those pairs. Okay, so price is currently retracing, and where should we expect price to retrace to? There are few points we expect price to retrace to. One point is here, which it has already violated, which was a previous support level. We may have been expecting support to turn to resistance. Okay, and if that doesn't happen, there is also a mitigation block right about here. If we expect to see price trade into this mitigation block and continue trading lower. If that doesn't happen, another point of interest we should be looking out for is the 50% or the 61%, which coincides with another order block that resides around here. Okay, right. So these are the places we expect price to retrace to. One amongst all these three levels, it has already violated the support level, right? So we may be looking at the breaker block or the other block, which coincides with 61% and 60% of the Fibonacci retracement. Okay, right. So when we see dollar retrace back to that level, already on the week we've confirmed that the dollar is bearish. Okay, so if we see price retrace back to those levels, then we should be looking for short opportunities on the dollar. Okay, so I've told you what we saw in the last week. Last week we saw much of a retracement on the dollar, and this week we're also seeing, coming into the next week rather, we're also seeing that the dollar may continue its upward movement, which is a retracement up to any of these levels before going down further. Okay, so let's check the daily time frame and see what we have. Beautiful structure on the US dollar right here on the daily time frame. Okay, so price moved down all the way to breaking this lows, just like we saw on the weekly. It also gave us a clear structure right here. Let me take this chart off. Let me take off this object so that you can have a clearer view of the chart. Okay, so price broke down all the way to this place, gave us a massive sell move. For those of you who were in this sell, congratulations. For those who missed out, it's not yet over. Price is currently retracing on the daily time frame, and we may expect to see price trade lower after retracing to those levels that we called out on the weekly time frame. You can also do the same thing we did on the weekly time frame here on the daily time frame, and you can see that price is not yet at a premium level where we expect to see it continue further down. So you can mark out levels where we expect price to get to before trading further downwards. Okay, all right. So seeing this, we expect the dollar to keep pushing upwards until any of these levels that we've marked. You can also see some levels here, some mitigation block right here, where you can expect price to trade to, and then the 61 and 50% level of the fib, and also some fair value gaps around these levels. Okay, so this is where I expect the dollar to trade into before continue selling. So for me, going into the next week, I'm going to be going long on the dollar so long as market structure is on my side. Remember, market structure is king, right? So long as market structure is supporting this bullish movement up to this place, remember the bullish movement is only but a retracement into any of these zones. I'll continue taking long positions on the dollar until it gets to any of these levels. Okay, so now finally to the hourly time frame, the 4 hours, going to be seeing beautiful structure here on the dollar when the dollars expanded to the downside, and now we're also seeing buy structure. Now look at this, we've seen buy structure on the 4 hourly time frame. Now if you've done your multiple time frame analysis very clearly, you see that this buy structure is only but a retracement on the daily, which we and on the weekly, which we should pay more attention to. Okay, so we're not saying that the dollar is completely bullish. On the weekly and on the daily, the dollar is bullish. The dollar is bearish rather, but on the 4 hourly time frame, it is bullish. But the bullish momentum of the dollar, or the bullish structure of the dollar on the 4 hourly time frame, is only but a retracement into all of those levels that we called out to you. Okay, so if I were you, I'll be looking out for these levels that I have marked out here on the 4 hourly, on the monthly, on the weekly time frame, and on the daily time frame, and we'll be looking at taking short positions for the dollar when it gets there. All right, so until this structure changes, this buy structure that we can see here, you can see our higher highs and the higher lows, the higher highs, the higher lows, the higher high. We may expect another higher low until we see price come all the way up here. Then we'll be looking for structure to the downside, and we'll be shorting the dollar from there. So feel free to take screenshots of this, all right, and see how it plays out. On Wednesday, we're going to also be revisiting the chart, so do well to check out this channel on Wednesday next week to see how these our charts play out. And we're going to also be giving some forex psychology and risk management tips by Wednesday, so do well to come online and check out this channel on Wednesday. Okay, now moving on to the next pair we have at hand, the Great British Pound against the dollar. So we're going to be starting as usual from the monthly time frame. Okay, all right, so looking at the monthly time frame, Great British Pound is currently retracing to the upside because it's already on a downtrend. If you can see this, the Great British Pound is already on a downtrend. All right, we saw structure take out the previous low when traded all the way up here, but didn't take out the previous high, and then gave us this low. Now, what do we expect to see on the Great British Pound? We expect to see something like this, price trading all the way here, and then giving us a continuance of the downtrend. Okay, so we expect to see the downtrend continuing for the Great British Pound. Okay, so on the monthly time frame, it's established that the Great British Pound is bearish. Okay, so the whole buys we've been seeing on the Great British Pound is completely a retracement of the bearish trend. Okay, so if at any point you now see a resumption of a full-time sell on the Great British Pound, then you should also know that it is following the monthly time frame. Now, looking at the dollar index, we also confirm that dollar index on the monthly time frame is a bullish structure. Dollar index on the monthly time frame is bullish, is only giving us a bearish retracement. Now, correlating it with the Great British Pound, you'll see that the Great British Pound is bearish. That is to say, the dollar is buying on the monthly time frame and currently retracing, while the Great British Pound is currently selling on the monthly time frame and currently retracing. Okay, so you can see that that correlation completely exists between the Great British Pound and the dollar. They are inversely correlated. Okay, so whatever we're seeing on the Great British Pound, we expect to see on the dollar, and whatever we're seeing on the dollar, we expect to see on the Great British Pound, although the dollar is the benchmark asset for all dollar denominated pairs. Okay, all right, so on the monthly time frame, we've been able to establish that it is bearish and it's only giving us but a retracement to the upside. All right, so for the most of this month, we've been seeing expansion to the upside. Price is trying to fill fair value gaps. It's trying to give us a fair valuation of price before it continues its downtrend. Okay, so going forward, we expect price to fill up most of these levels before we see it shorting all the way down. So for me, one of the levels that I look forward to seeing price coming to is 1.32 levels, 1.32000 levels. I expect to see the Great British Pound trade up to that level. Okay, currently it has traded up to 1.31 levels. I expect to see it at 1.32 levels before continuing shorting. So I still expect a little more push to the upside before the downside. But remember, I do not own the market. Okay. All right. So continuing on the Great British Pound, we're going to be switching down to the weekly time frame. Okay, going to be switching to the weekly time frame to see what happened in the past week and what we project to see in the coming week. All right, so on the past week, we saw the Great British Pound retracing, giving us kind of an engulfing candle, almost an engulfing candle on the weekly time frame. The price almost engulfed the most of what happened in the previous week. Okay, So this week we saw price trading downwards, almost engulfing what happened in the previous week. All right, so like we said, on the monthly time frame, price is currently bearish. Okay, it's only giving us about a retracement. So when we finally move to the hourly time frame, we'll be checking whether we'll see if we're going to see a bearish structure to the downside before we confirm a resumption of the monthly bearish structure of GBPUSD. But currently on the weekly, it is still bullish and it's respecting and maintaining its bullish strength. Okay, because we've been able to see break of structure to the upside. We saw price move all the way from here, took out this high residing around here. Okay, price took out this high when it traded into this place, then retraced all the way here, came back up here, took out this low residing here when it came here, and then boom, we saw this price took out the highs, came back here and took out another high, giving us a series of higher highs and higher lows. Who knows, this current place may be the next higher low, and we may see a high all the way up to this place. Okay, remember I still told you that I anticipate seeing GBPUSD around 1.32 level, and another point of interest for me for the Great British Pound is 1.34 levels. Okay, this place is a place of interest for me. 1.34 levels. Yeah, it's a place of interest for me. Okay, so if I see bullish structure resuming, I should be trading Great British Pound up to these levels. Okay, so that's for the weekly time frame. We've seen what price did for the most of last week. So last week price retraced downwards into this former resistance level. So we may be seeing price going further up afterwards from here. Okay, price will be going further up afterwards from here. Until price takes out this low, which resides right here at around 1.25 levels, until price takes out that low before we say the sell structure on the day on the weekly has resumed. Okay, but until then we'll be looking out for buys of the GBP from the weekly outlook. Okay, so currently this is what price has done for most of last week. If you trace into this level, we may be expecting to see price trade all the way back up here on the weekly, and like I said, until price takes out this level before we confirm the bearish structure on the weekly. Now over to the daily time frame. Now beautiful, on the daily time frame the structure looks more clear. Here on the daily time frame you can see that GBP is clearly on a bullish structure to the upside. Okay, so what did price do for the most of last week? For the most of last week, price retraced down to but most of last week price has retraced down to about 50% level of the Fibonacci retracement tool. Okay, so price has given us a 50% retracement off the whole bullish swing. So from this stage, you should be expecting some form of bullish return. You should be expecting the price to return back to a bullish trend from this place. Okay, so a resumption of the bullish trend is what we expect right from this particular region. Okay, so if we see bullish structure on the hourly time frame, then we should know that the trend has resumed. But until then, price may still be attracted to some further discount levels at around 61.8 or 78.6, seeing that another block exists somewhere around 78.6. That may be a point of interest, so we'll have to mark that out. And then on the hourly time frame, we may also check out for point of interest around 61.8 to see if it's going to be able to attract price all the way down. But apart from this other block around here that occurred before this bullish expansion, there is no other point of interest that coincides with a discount level. So if that is all we see, then we may be expecting price to come here. But if not, remember, structure is king. Wherever structure leads us, we know what to do. Now we have point of interest to the upside, we have point of interest to the downside. So follow structure to the downside if structure is directing you downwards, and then follow structure to the upside if it's directing you upward. To confirm this, we have to go to the 4-hourly time frame to check out what we want to see. So on the daily time frame, we've been able to establish that this is what price did. The price retraced down to the discount level below 50% of the whole swing. And for the next week projection, we're expecting price to trade all the way down here, depending on structure, or trade all the way up to 1.32 levels if structure shows us direction to the upside. Okay, so that to the hourly time frame, the 4-hour time frame. Okay, and the 4-hour time frame is still showing us bearish structure. Right, we can use path tool to see this. Price gave us a low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low. Now it's giving us a lower high. We may see a lower low all the way down here. All right, so feel free to screenshot this at this current point. So I'm going to leave this for a few seconds, maybe 5 seconds, for you to screenshot it. So we may see a low all the way down here, or we may see a high from here all the way up to this level. All right, so feel free to also screenshot this. So we're looking at price coming down all the way down here for the sell if structure continues and persists for a sell, or all the way up here if structure persists for a buy. Okay, so two places that we're looking at, we need to mark out the structure on those two places. So when price takes out this low, we're looking at price trading all the way low to this place. Okay, if price takes out this low, we're looking at price going all the way here. But then if price takes out this high and continue trading higher, then we'll be looking at price trading all the way up here. Okay, so feel free to screenshot this. All right, so this is where we're looking at price trading into for the Great British Pound going into the next week. Okay, so these are our two scenarios. Always be probable, always trade and think in probabilities. Always trade and think in probabilities so that you will not be caught up in the market, because you do not own a major stake in the market. So with your retail capital, you may not be able to move the market in your direction. So always trade in probabilities so that when you're checking out, you know where market is going to and you follow suit. Okay, and now finally to the last pair we're going to be discussing today in our weekly outlook with CJ. We're going to be looking at the Euro USD, and as usual, we're going to be starting from the monthly. So if there are any other pairs you want us to analyze going into next week's weekly outlook, please inform me in the chat box, or you can send me a mail. My mail is right there in the about section, or you can also send me a DM on Instagram. My handle is CJ_banks. C with a J and a Y, C with a J and a and a Y, and underscore banks. I'm going to leave the description link. I'm going to leave the link in the description below, so you can feel free to send me a message and tell me if there are any pairs you want me to include in my weekly analysis. I'm going to look into it and do the analysis for you. Remember, we're here to serve you. Just thought about doing this for the public. All right, so for the Euro USD, starting from the monthly, similar to what we have on the GBP USD, is right in the downtrend because of what the benchmarker said the dollar is doing. Euro USD is in a downtrend generally, and it's currently just retracing to the upside. Okay, so where is it going to? If you can flip this, you can see that price has already done more than 50%. It's now at 61%. For those who are ICT traders, we call this the optimal trade entity, the OTE level. Okay, the price has traded into that level, and we may be seeing it returning or resuming its downtrend going from here. So for most of last week, for most of this week and this month, price has gone into an optimal trade entry, into a premium level, ready and ripe for a sell. So going into next week, if you see serious sales going on Euro USD, then you know that it is reacting to the monthly structure. Okay, of course, if you look at lower time frame structures, lower than the monthly, we're going to be seeing that price is only but reacting. You'll see that price is giving us a strong bearish structure, but you know that that is just a retracement on the day, on the monthly time frame. Okay, so we'll go switch down to the weekly. So switch down to the weekly time frame, we can see that price is also giving us strong bearish structure, just like we had in the GBP USD. Price is giving us strong bearish structure. You can see our higher high that took out most of the previous highs that existed around here, 1, 2, and 3. Price came down all the way here, gave us a higher low, gave us a new higher high, a higher low, now a higher high. We may see price coming down to give us another new higher low before trading back up, or we may see price coming down all the way here, and we know why, because of the monthly time frame. Okay, so for the most of last week, for the most of this week rather, forgive me, for the most of this week we saw price giving us a retracement after the expansion. So this expansion of the previous week took out this high, after taking out liquidity in an expansion, we expect to see a retracement. So if there are any terminologies that I've used here that you would like me to do a video to explain those terminologies, please do so in the comment section below and tell me the terminologies you want me to do a video on, and I'm going to do a separate video on any of those terminologies for your understanding. Okay, so we're expecting to see price still come down, fill up this fair value gap going into next week. All right, so going into next week, you can see that GBP Euro USD has created a fair value gap on the weekly here, so we may want to see price fill it up. Okay, so for those who are day traders, for the most of next week, you may see price fill up this and maybe continue in the weekly bullish structure, or take out this low and continue in the bearish structure. Okay, so until price takes out this low at around 1.063 levels, we will say that price on the weekly time frame is still bullish. Okay, so on the safer side, you can also do a Fibonacci retracement of this to see where are the odds lying. Okay, so you can see that 50% of this move is still below here, so you can be expecting to see price here or here. So you can even mark out the whole level. Okay, marking out the whole of that level, you'll see that it attracts price because there are two confluences there. There's another block residing right here, and the other block captures the 50% and the 61.8 levels of GBPUSD. Okay, so until we see price trade all the way to this level, we may be expecting it to continue selling until this place before we continue in the buy structure. Okay, so those are our buy outlooks and our sell outlooks for next week. We expect price to come down, fill up the fair value gap, trade into 50% of this fib level. Okay, so as a day trader, this should be enough for you. This should be enough for you for the week. Okay, except you are going or looking to take swing positions, or you're going into position trading, then you should be looking and waiting for the monthly time frame. All right, for price to take out this low. Well, unless that happens, then you should be looking at taking advantage of this retracement that started this week going into next week. Okay, then for the daily time frame, and switch down to the daily to see that what we drew on the weekly time frame is still very much valid. All right, it's still very much valid. So we'll be expecting price to trade into any of this level. For most of last week, we saw how the retracement started, and price has been trading, filling up the fair value gaps that it left while it was expanding to the upside. All right, for most of last week, we saw GBP Euro USD selling to the downside. Okay, so we may expect that to continue into next week. All right, so even if we switch to the hourly time frame, we'll see that it has given us a bearish structure. So let's do that right away. All right, so on the hourly time frame, we see a bearish structure that started forming. Price traded all the way here, traded down here, struggled a little, and then boom, broke structure to the downside, gave us another lower high and a lower low, the lower high and the lower low. So we expect that to continue all the way to any of these levels. Okay, all right, a lower high and lower low continuously until we see a change of structure on the hourly time frame to the buy side. Okay, we will continue selling euro USD. So for day trading analysis, euro USD is on the sell trend, and will continue taking short positions of euro USD until we see a switch in structure. Okay, so now you know what's happening on euro USD, GBP USD, and the dollar index, and you know what to expect. For euro USD and GBP USD, we expect to take short positions until price gets to any of these points of interest. Then we expect to see a break of structure to the upside for us to continue in the buy. But unless that happens, we'll continue taking short positions on euro USD and GBP USD. For other currency pairs that start with the USD, that is like the USD card, USD JPY, then we'll be taking long positions on those ones. Remember, tell me any pair you want me to add to my analysis so that I'll share with you and you'll be able to be guided properly. If there are any terminologies that I've mentioned that you are not so clear with, then we're gonna be looking into it. And then finally, for the fundamental analysis for the most of this week, we didn't see. By the way, this is forexfactory.com. They are not sponsoring this video. I'm just using it as my calendar tool for fundamental analysis. Personally, my trading strategy does not include news trading. So all I do is to check out for the news releases and then I exit positions whenever I see them. Okay. So for next week, we're expecting to see a couple of high impact news starting from the euro on Monday. So around 8:15, 9 a.m. I'm going to be watching, and then 9:30 a.m. for the GBP news. I'm going to be watching out what's going to be happening here, and then I'm going to also be trading carefully. Okay, so if I'm not in the beginning of a trend, then I'll be looking to exit. Or if I've already caught some decent pips, say about 30 to 40 pips in the London session, GMT plus one, all right, then I'll be looking to exit positions before any of these levels. Okay, then on Tuesday, we're going to be having USD consumer sentiment. Okay, all right, so it's a high impact news. I may be exiting positions before then if I'm not in the right position in the trend. So if I didn't start a trend then, I'll definitely be exiting around these places. Then on Wednesday, we have the FOMC by 7 p.m. By this time, I'm out of most of my positions as I don't want to be caught up. I don't have a strategy, including news trading until then. Whenever I see high impact news like this, I exit. And then on Thursday, we're going to be having Euro news for main financing rate, which is the monetary policy for the euro, and we have that around 1:15 on Thursday. So I'll be exiting my positions before that particular time on Thursday. Then on that same Thursday by 1 p.m., we're going to be having the advanced GDP quarter on quarter news release for the USD. All right, so if I'm in a good position, then I should be out. And then on Friday, we're going to be having the Japanese BOJ monetary policy statement. So that I wouldn't be in a trade by that time. I'll just look out and see what happens there. And then all the high impact news like the University of Michigan revised consumer sentiment by 3 o'clock on Friday. By 1:30, we also have the core PCE price index. All right. So by the time all these news releases are coming out, if I'm not in a good position in the market, then I'll surely be exiting my trade. Okay. So that being said, I wish you good luck and good trading. Remember, my name is CJ and I do not own the market. I only trade and analyze it. Until then, until we see you again on Wednesday next week, keep trading.